Hi, my name is Nur Ain Fadila binti Hasnizam and my metric number is H2030303. I'm from Group A. I want to talk about two companies that are leading the way in the global hospitality, tourism and wellness industry, Berjaya Land Berhad and Mulfa International Berhad. These companies were selected for their strategic significance and exemplary contributions to a sector that is absolutely vital to global economic development. Mulfa International Berhad is another shining example. They are recognized for their expertise in investment and hospitality ventures. Next, Berjaya Land, with its presence in Malaysia, Iceland and Japan, has a truly global footprint. They manage 28 hotels and resorts across Malaysia and internationally, including renowned establishments like Berjaya Langkawi Resort. Berjaya Land's commitment to luxury travel and wellness. Both Berjaya Land and Mulfa demonstrate how business in this sector can adapt and thrive by addressing the evolving needs of modern travelers. Thank you.
Berjaya Land Berhad, a Malaysian corporation created in 1990, demonstrate both entrepreneurship and diversification. Beginning with gaming and lotteries, Billion moved into hotel, real estate development, luxury autos and lifestyle services. Its gaming segment, operated by Sport Toto Malaysia, has over 618 locations and is still the industry leader, thanks to innovative lottery technology. Internationally, Billion owns HR Oran PLC, a UK-based luxury automobile reseller that just constructed a cutting-edge supercar showroom in Hatfield. In the hospitality industry, Billion runs 28 hotels and resorts globally, including major projects such as the Iceland Parliament Hotel, Four Seasons Hotel Kyoto and Sheraton Hanoi. Its property development business responds to market demand through residential and commercial development, which contribute considerably to overall income. Billion also invests in lifestyle investment including club, recreational facilities and vacation package. Billion increased their sales by 200% to RM 7.27 billion in 2023, with operated profit of RM 394 million, thanks to strategic sustainability effort, eco-friendly initiative and community participation. With a diverse portfolio, strategic direction and emphasis on sustainability, Billion is ideally positioned for long-term growth, leveraging on tourist recovery, local demand and worldwide prospects.
Mulfa International Berhad, founded in Malaysia, is a leading conglomerate in high-value property development, investment, hotel management and education. The company operates across Malaysia, Australia, New Zealand, the United Kingdom and Singapore with key assets including the award-winning leisure farm in Iskandar, Malaysia, Sanctuary Cove in Sydney, Norwest Business Park and Norwest Quarter in Sydney, and the London Marriott Hotel Grosvenor Square in London Mayfair sector. Mulfa financial strength is reflected in its outstanding asset base, with consolidated total asset exceeding 6.34 billion ringgit Malaysia and consolidated shareholders funds exceeding 3.60 billion ringgit Malaysia. Its listing on the main market of Bursa Malaysia Securities Berhad adds to its market credibility and investor confidence. Mulfa International Berhad also has demonstrated a worldwide view in many of its developments, such as the Norwest Quarter being carbon neutral. Through sophisticated technology, innovation and sustainability concepts, Mulfa continues to establish industry standard for environmental stewardship. Mulfa's strategic visions and operational excellence lead to its high-class development and investment of property with a diversified portfolio that spans geographically across the globe in multivarious fields. The company plays an important role in national economic progress and serves as a good example in pursuing sustainable commercial activities.
Assalamualaikum and hello everyone. My name is Erwin Ezan bin Arianda. Today, I will be presenting the ratio analysis for Mulfa International Berhad as part of our financial review. This analysis covers three key areas, which is liquidity ratio, activity ratio and profitability ratio. Now, let's begin with liquidity ratio. Liquidity ratio assesses the company's abilities to meet the short-term obligation. For the current ratio, it is decreased from 1.89 in 2022 to 0.88 in 2023. This indicates that Mulfa short-term assets are insufficient to cover its short-term liabilities in 2023. Quick ratio fell from 0.87 to 0.38, signaling a significant drop in liquid assets after excluding inventory. Next is net working capital, also declined sharply from RM 668,315 ringgit to negative 205,227.77 ringgit. This highlighting potential challenges in managing daily operation. This concludes that Mulfa liquidity position weakened substantially in 2023. Next, we will talk about activity ratio, which measure operational efficiency. The first one is total asset turnover, or TAT. It is improved from 0.16 to 0.91. This indicates that better utilization of assets to generate revenue. The second one is account receivable turnover, or ART. It is increased from 2.50 to 3.62. This reflects that faster collection of receivable. The third one is inventory turnover. It is rose slightly from 0.32 to 0.445, showing improved but still low inventory management. From this, we can conclude that Mulfa showed improvement in operational efficiency, particularly in managing receivable. Now, I will talk about leverage ratio. Leverage ratio assesses the company reliance on debt. The first one is debt to asset ratio, which increased from 0.40 to 0.43, indicating a slight rise in the company's reliance on the debt to finance its asset. The second one is debt to equity ratio, which rose from 0.67 to 0.75, showing increased financial leverage and greater reliance on debt relative to equity. Lastly, time interest earned is declined from 2.28 to 1.89, suggesting a reduced ability to cover interest expenses with operating income. So this concludes that the increase in leverage ratio signals a higher financial risk for the company, particularly in earning fluctuate. For the next slide, we will talk about profitability ratio. So for the first one, return on equity, ROE, increased from 2.43% to 3.81%, reflecting improved return for shareholders. The second one is net profit margin, rose from 8.91% to 9.49%, signaling better cost control and revenue generation. However, return on asset, ROA, remains stagnant at 1.46%, indicating no significant improvement in asset utilization for profit. So, we can conclude that while profitability improved in some areas, the overall return remained modest. From this, we can conclude that Mulfa showed improvement in operational efficiency, particularly in managing receivable.
Assalamualaikum and very good morning to our tutor. My name is Fauziha binti Auni. Today I want to present about ratios analysis for Berjaya Land International Sendirian Berhad in year 2022 and year 2023. The current ratio of 1.06 indicates that the company has sufficient current asset to cover its current liabilities, albeit with a narrower margin than in 2022. This slight decline suggests a tightening of liquidity but maintains the company capacity to meet immediate obligation. Secondly is activity ratio. As you can see, Berjaya Land achieved higher revenue generation relative to its total asset. Reflect in each large bar. This indicates better overall asset productivity. Slightly taller bar shows Berjaya Land's strength in quickly collecting receivables, ensuring steady cash flow. The significant height of this bar illustrates Berjaya Land's excellent utilization of fixed asset to drive. Third is leverage ratios. As you can see the graph, the bar of Berjaya Land is lower, indicating a relatively balanced use of debit and equity. This reflects a more conservative financial approach, reducing financial risk for equity holders. The shorter bar indicates that only a small fraction of Berjaya Land's assets are funded through debit, demonstrating a strong asset-backed financial position and lower risk. But not least is profitability ratio. The shorter bar reflects a lower net profit margin, showing that Berjaya Land earns less profit per unit of revenue compared to Mulfa International. This might be due to higher operating costs or competitive pricing strategies. The shorter bar suggests less efficient asset utilization, which may result from underperforming of idle assets. Okay, that's all from me. Thank you.
Hello, my name is Karen Tasha Abdul Qadir and my metric number is HFT20303. Today I will present a comparative analysis of the financial performance of two companies, Berjaya Land Berhad and Mulfa International Berhad. We will explore the liquidity, efficiency and debt management and profitability. Let's start with liquidity, which measures the company's ability to pay short-term liabilities. First, current ratio Mulfa International Berhad has a ratio of 1.89, meaning it has $1.89 in current asset for every $1 of current liabilities. This is higher than Berjaya Land ratio of 1.25, showing that Mulfa is better position to handle the short-term obligation. Next, the quick ratio, which excludes inventory. Here, Berjaya Land has with a quick ratio on 1.01 compared to Mulfa 0.87. That indicates that Berjaya Land is better equipped to meet its short-term liabilities without depending on inventory. Now, let's look at net capital, which is the difference between current assets and current liabilities. Berjaya Land Berhad has more working capital than Mulfa International Berhad, putting it in a stronger position to cover its short-term expenses. This reflects Berjaya Land's better financial condition for immediate obligation. Moving on the efficiency ratios, Berjaya Land Berhad has a total turnover at 0.46 compared to Mulfa International Berhad 0.16. That's mean Berjaya Land generates $0.46 revenue for every $1 of asset, showing better efficiency using its resources. For inventory turnover, Berjaya Land again at outperformance with 3.57, while Mulfa International Berhad stands at 2.50. Besides, Berjaya Land is better at managing its inventory and converting it into sale. Next, let's discuss receivable turnover, which measures how effectively, a company collects debt from its customer. Berjaya Land has a ratio of 0.68 for its leading Malpa International Berhad 0.32. Berjaya Land is much more efficient in collecting payment. For fixed asset turnover, Berjaya Land has a significant lead with 3.07 compared to Malpa at cost 0.22. That means Berjaya Land is more effective in utilizing its fixed asset to generate revenue. Now, let's analyze the company's debt management. Berjaya Land Berhad has a higher debt to asset ratio at 57% compared to Malpa International Berhad 0.40%. This indicates that Berjaya Land relies more heavily on debt financing for its operation. Similarly, the debt to equity ratio is 130% for Berjaya Land, while Malpa International has a lower ratio of 67%. This shows Malpa International manages its debt more conservatively and less leverage. When it comes of time interest earned, which measure how well a company can over its interest expenses, Malpa International Berhad is in much stronger position. Malpa has a ratio 2 to 8%, meaning it can cover its interest expenses 2.28 times over. In contrast, Berjaya Land has a much lower ratio of 16%, indicating a high risk of default on its debt obligation. Let's examine profitability. For return to equity, Berjaya Land Berhad is with 4.19% compared to Malpa International 2.43%. That indicates Berjaya Land providing better returns to its stakeholder. However, in terms to net margin, Malpa International outshine with 8.91%, while Berjaya Land showed a negative margin of negative 3.93%. That means Malpa is more profitability relative to its revenue. Finally, let's discuss operating margin. Berjaya Land has a significantly higher operation margin of 3% compared to Malpa International Berhad 16%, show that Berjaya Land is more productive and efficient in managing its operating expenses. In conclusion, both companies have their strengths. Berjaya Land demonstrates stronger liquidity, asset utilization, and operating efficiency. On the other hand, Malpa International excels in debt management, risk handling, and profitability. Thank you.
Next, we move on to comparative analysis for Malpa International Berhad and Berjaya Land Berhad in liquidity ratio. Berjaya Land's current ratio slightly decreased to 1.06, while Malpa International Berhad dropped at 0.8. The quick ratio for both companies fell, with Berjaya Land at 0.97 and Malpa at 0.38. Net working capital reduced for both, with Berjaya Land at 242,303 ringgit and Malpa at 205,277 ringgit. Liquidity ratio. Berjaya Land show a strong performance with total assets turnover at 0.50 and fixed asset turnover at 3.26. Inventory turnover rate robust at 4.29, while Malpa company improved account receivable turnover to 3.62 and inventory turnover to 0.45. Next, leverage ratio. Berjaya Land's debt to asset increased to 1.43, while debt to equity ratio decreased to 0.75. This is showing to shift towards equity financing. Malpa International Berhad debt to asset ratio rose to 0.65, and its debt to equity increased into 0.87. Time interest earned ratio were similar for both, with Berjaya Land at 1.95 and Malpa at 1.8. Profitability ratio. Berjaya Land's ROE rose to 3.97% and its ROA 1.63%. The net profit margin increased to 3.26%, while the operating profit margin increased to 6.7%. Malpa International ROE stood at 3.18%, with the steady ROA of 1.46%. Its net profit margin dropped slightly to 8.01%, and its operating profit margin improved to 20%.
Today, we are looking at the financial performance of Malpa Company over the past 2 years, 2022 and 2023. We will explore key areas like liquidity, efficiency, debt management, and profitability. As you can see here, Malpa liquidity ratio have decreased significantly. The quick ratio dropped from 0.87 to 0.38, and the current ratio fell from 1.89 to 0.88. This means the company is facing more difficulty covering its short-term debt using available asset. On a positive note, Malpa has improved in efficiency. The account receivable turnover increased from 2.5 to 3.62, meaning they are collecting payments faster. Inventory turnover also improved from 0.32 to 0.46. Malpa debt ratio remains stable at 0.67, indicating consistent leverage. However, the debt to equity ratio rose from 0.67 to 0.78, signaling that the company is relying more on debt, which could increase financial risk. While the return on asset ROA stayed steady at 1.46%, there was a slight drop in net profit margin from 9.49% to 8.91%, and a decrease in return on equity ROE from 3.18% to 2.43%. This shows that the company is not as profitable as before, which can affect shareholder returns. Malva also experienced a drop in net working capital in 2022 to 2023. This shows a reduction in the company's ability to fund day-to-day operation comfortably. In conclusion, Malva company has improved efficiency in some areas like receivables and inventory management. However, there are concerns around liquidity, profitability, and an increased resilience on them. To secure long-term growth, the company needs to strengthen its profitability and improve its financial position. Thank you.
Of Berjaya Land Berhad financial performance 2022 to 2023. Number one is liquidity position. Current ratio dropped from 1.625 to 1.06 ratio on current asset. Quick ratio dropped from 1.01 to 0.79. Reduced ability to cover liability without inventory. Net working capital decreased from RM 704,465 to RM 243,303. Strength cash flow. Number two is operational efficiency. Total asset turnover increased from 0.46 to 2.50. More efficient asset utilization for sale. Inventory turnover slight drop from 6.69 to 6.20. Inventory management remains good. Fixed asset turnover increased from 3.07 to 3.26. More productive of fixed asset. Number three is financial stability. Debt to asset ratio increased from 1.31 to 1.43. Higher reliance on debt. Debt to equity ratio dropped from 1.31 to 0.75. Shift toward equity financing. Time interest ratio increased from 0.16 to 1.95. Improve ability to cover interest expense. Number four is profitability. ROE decreased from 4.20% to 3.97%. Positive recovery to shareholder. Net profit margin decreased from 3.93% to 3.26%. Improved profit generation. ROA decreased from 1.81% to 1.63%. Better asset utilization. Number five, recommendation. Improve cash flow management. Anticipate receivable collection, reduce liability. Enhance inventory management as data analysis for accurate stock forecasting. Balance debt and equity financing to reduce financial risk. Boost profit margin. Cut operational costs and adapt productivity. Enhancing technology. The conclusion, Berjaya Land Berhad show mixed performance but hold potential for recovery through better management strategy.
Berjaya Land Berhad show improvement in operation efficiently between 2022 and 2023, particularly in asset turnover. However, the company's liquidity weakened, indicating short-term financial pressure. The rising debt to asset ratio suggests increased credit usage balanced by stronger equity financing, which is healthier long-term. Profitability remains stable with positive shareholder returns, but cash flow and cost management need improvement to address liquidity issue and reduce risk. The company should focus on enhancing cash flow, optimizing inventory management, and balancing debt and equity financial for sustainable growth. Thank you.